General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS. Hi there, welcome to this week's edition of Bulls versus Bears. Gentlemen, welcome.
Hello, everybody.
Hello. Obviously, a bit of a rough week this week.
Oh yeah,
Something we haven't felt for 2 years.
That's true. Well, I mean, like rough week for the Bulls, anyway.
Rough week for the Bulls, yeah. But for the Bears, it's not even barely a sigh of relief. I wouldn't have thought. But yeah, we've had a pretty decent pullback and probably some of the worst price action, which we were talking about last week, JT. We ran that story. Is the run in the Mag 7 over? Nailed it, basically. It's I think Nvidia down 18% as of Thursday night. But
that's true. But the I guess the most disappointing thing is just the XJO. It's like on the way up we underperform, and on the way down we outperform. So
but it's very different this time around. The banks are getting hammered, which we all knew they were overvalued, and thankfully we might get to a point where we don't have to answer that question of why are the banks overvalued all the time. But I'm pretty sure we won't get any likes from people when we say "I told you so." But I think it's pretty. I haven't seen on a day where there's been no specific news. Don't think I've seen CBA in the top 20 most down stocks. Like it's down 3.5-4% and broken through that 148 level. Value traders will probably be on around about the 110 bit, I think. The Gore next divvy, but we'll look. It's one of those things that we've got payrolls tonight, and the Trump job losses won't come through at least for another month.
You mean the Doge?
The Doge, the Doge efficiencies, which if we want to put a face to that, it's probably about 500,000 government employees out of work, but they're the same sort of things happening here in Australia. We had GDP on the week. Government spending is the highest percentage on record of GDP growth in Australia, and is the only thing holding up the employment market. So these are the things you get in an election year, which I guess was the election year for them last year. And I think we got a 0.6 best in 2 years for GDP. So apparently we're all screaming for rate cuts. So Kai, you were on with Howard Coleman this week, mate. What
yesterday was it?
Yesterday,
I was on with Howard, replaced Grady for the week, I think. It was actually really nice being on with Howard. Actually, he's I think most of the companies were on the same point. Obviously, tech stocks, I don't think it's funny, right? Because I think with Team Invest, obviously they prefer companies that are long term. So a lot of it gets cut out. Whereas for us, we take opportunities. So you can be wrong and right depending on the time frame. We talked about Zero. I do still like. I think
they would have liked Zero.
No.
They didn't really.
Tech companies.
Wow, yeah. Well, geez, he must have hated Life 360 then.
Oh, absolutely.
Yeah.
Absolutely. I don't really. I know Zero is tech, but it's a spreadsheet, isn't it?
No, I mean it's a specialized spreadsheet.
Yeah. But all I'm saying is it's not AI or anything fancy like that. It's not.
One of my favourite parts of the episode, because we did watch it in the office actually while you were there, was Howard brought up the tariff wars from the Depression, and I was just wondering whether Howard was actually whether he lived it or whether he read that in a textbook, because he is as old as I think he's mates with Moses. I think.
I don't think there's been major tariff war for a long time. So I mean,
it's because it's retarded.
Absolutely, and exactly. So I don't know what Trump's getting at the moment.
Well, he's using a blunt instrument.
Yeah.
I get his sentiment.
Yeah.
I think, to America first, don't get me wrong. But I think the way look, you look at the Ukraine deal, for instance, he's getting minerals out of it, basically. So I think that's the stick he's waving because he knows it's gonna destroy value across a bunch of companies. I think that's just the threat. I don't think he's not as much as everyone harps on. You don't get to be president without having some form of smarts. So,
he's a smart guy, but as Trudeau said, he's a very smart guy. He's done a lot of big things, but this is very dumb, Donald.
Yeah.
Because I think in the end, inadvertently, by putting on the tariffs, you're actually punishing US.
Yeah. There was a great TikTok this week where there was Trump, the supporters protesting something somewhere, and they all think that China pays. So and a guy came in and explained it, and they're just like, what? We pay.
But mind you, don't forget, Trump's trying to reverse, I think, 30 years of globalization. Yeah, because he understands, basically
it's more than 30 years. It pretty much started after the Second World War.
But either way, all the jobs have been shipped offshore.
Yeah,
there's no way they're coming back without some sort of incentives. So I guess that's what he's trying to do. And as you said, he's using a blunt instrument.
And then making a bunch of exceptions.
Yeah, and people don't actually understand the ramifications of that.
Well, and I've been asked this question a lot from clients and stuff this week. It's like, everyone knew he was going to do it. And I think Wall Street, they were like, nah, he's just rattling sabers. And he has, and then he's gone, yep, they're going to go into place. And then he's watered down the auto tariffs one. And then he's watered down, I think he's given another stay of execution again.
So just on the tariffs though, the first we heard of tariffs was maybe about a couple of years ago. It was actually from the European automakers.
Yeah.
They were the one that first said, we need tariffs on all the Chinese cars because they're going to just flood the market. And they were like, okay, we got to do it. We got to protect our own industry. When Trump does it, it's like, oh my God, it's the worst thing in the world. But
we kind of expect that crap from the Europeans.
Yeah.
But
just on that, I think I mentioned the BYD shark last week. They had a test between, so the biggest selling four-wheel drive at the moment is the Ford Ranger.
Yeah.
And the BYD Shark is the natural competitor.
Number two is the Hilux.
Yeah.
So,
but basically, it's $15,000 cheaper, and it actually won the actual test as well, so the head-to-head. So there's a lot of people, and they understand that Chinese car manufacturers have come a long way now.
Well, and that's something we'll get to a little bit further along, because I wrote an article for Livewire, and it sort of came off the back of one that we've got on the website as well. The Trump trade becomes the Trump trap. So we're actually officially below where we were on November the 4th.
Yep.
That's where we've got our friend up here. He's getting off Trump Force One. Is the bear. So but we'll get onto these guys later on. But essentially, the market's now obviously just getting really fed up of the uncertainty, and these trade policies. He goes, and even he's admitting, there'll be a bit of short-term pain and blah blah blah. But many people have tried to walk the economic tightrope.
Yeah,
I don't think any one of them's not fallen off.
Exactly. And let's not forget how overvalued or how expensive everything is.
Yeah,
the best phrase is that it's the everything bubble.
Yeah,
basically every asset class has gone higher.
It's so far beyond, a couple of standard deviations in terms of US stock performance in the last, against the rest of the world. So, but at the end of the article that I've written, it just does give some, some alternatives. It's been a great run in that index. The uncertainty is really having people questioning valuations.
Mm-hmm.
And what DeepSeek proves, and I think you showed me a great chart this week, JT, with was since DeepSeek came out, people have actually started, the pennies dropped that China's not just some, crappy T-shirt manufacturer anymore. Like their Silicon Valley equivalent, and I'm Kai, you can work out the pronunciation. I'm not even going to attempt that. I grew up in the country. It's not my...
Shenzhen.
Shenzhen. I know, I've been there, but yeah, everyone's starting to realise that these, they're high quality and their Silicon Valley is way more ruthless than the US as well. So and they're not mucking around. So go and have a look. It's on Livewire. It's also on our website as well. But there's some sort of actionable things in there where there's still value out there. It's just not in the US anymore.
That's right.
And that's okay.
And have a look at the charts. The FTSE's up. The DAX is up.
Yes.
And China is up. Hang Seng is up.
Yeah.
So, amazing. Yeah.
So even though XJO and S&P and NASDAQ are falling, there are things that are still going up.
Yeah. I mean, look, it's the banks falling at the moment. BHP is still where it was 3 weeks ago. And Fortescue's a little bit lower, but I think it's the growth end of that. The growth end of the market, which in Australia has had a ridiculous run. I mean, we've got, how many companies have we got on 100 plus PEs that have literally come out and said we're only going to have,
$1 million of revenue, something like that.
Well, yeah. I mean, Life 360 was one that once I saw that, that is a disaster waiting to happen, in my opinion. But I actually wrote that as a sell for my article for the Bull, and I had to replace it with WiseTech. Apparently, it was questioning my logic.
Oh, okay.
But yeah, I could just sum it up in one sentence: $4 billion market cap, 8 mil profit. And a third bit, 12% conversion to paid subscription. Yeah, it'll be. I thought the price to revenue or price to subscribers metric died in 2022.
No, you were saying it's the price to likes ratio.
Price to likes ratio, yeah, maybe that's the new one. So stock highlights this week, gents.
So I wrote these Aussie stock highlights. Star Group, basically, they went into trading halt and were close to voluntary admin. It looks like they've sold off a portion of their Brisbane property to the actual.
That's not even. That's not even open.
It just opened.
Yeah. Oh, how that's. Oh, that's
so what that means is so they're in trouble. They're like, we need money, and basically said, oh, what do you guys to sell? It's like, we got.
I'm pretty sure they offered up down here first.
Yeah, exactly.
Yeah.
So they're like,
no, I think
we got this lovely. Thing. No, we want the new one
with all the depreciation credits coming in and God knows what.
So that they've been bailed out, but it looks like it's the actual Brisbane one. It was the main developers of the actual property itself have taken it over, so that's why they wanted it.
Yeah, fair enough.
So that's
only in Australia could you lose money on a casino. It's kind of like the
house never loses.
The house never loses unless it unless it can't hide its money laundering. But yeah.
Rio Tinto, they're going to invest $2.8 billion to develop the Brockman syncline iron ore mine over the next 2 years. So that's another big tick. Basically, there's more iron ore coming online. So and that was on the back of I think it was like Corazon or CZR, got sold off. Twiggy bought that as well. So there's still.
Well, and he bought Black Hawk or something as well. There's another one nearby. Yeah, something Hawk.
But either way, it just shows that the iron ore miners are doubling down. They're they still want to keep expanding.
Well, they're getting it at a cheap price, and it's probably a year or two of pain. But it's not like China's already been in the doldrums for 3 years, 4 years, whatever. That's still not going to last forever. We did have the National Congress in China this week, or NPC. Which has confused the hell out of me when I've been on Ausbiz because I keep thinking they're talking about NPC. But and they've targeted 5% plus GDP growth this year, and they'll stimulate accordingly.
Yeah.
So that's kind of been missed because Trump steals every bloody headline these days. But that's where the weakness in our market's going to be. Basically, everything that went up last year is probably, I think that
that whole basically
rebalance. I think the banks and the tech stocks and things like that.
So what maybe
probably not energy though. Energy still looks dodgy as, but
Trump wants his drill baby drill. He wants the price.
The Woodside switch to Worley JT, mate. I'd swear that was genius because Worley's done nothing. Well, it hasn't rallied its ass off. But it's not.
Just hasn't fallen.
I think we sold Woodside at 27. It was $22 the other day. And that question's definitely. I wrote an article 3 years ago saying when Woodside was at just taken over the BHP assets since it was at $39, and I said bean oil instead of Woodside.
Yeah.
And didn't I cop a flogging on social media? Oil's still $60, guys. Woodside's half. So and MinRes, the disasters continue.
Yeah. So Chris Ellison is now not a billionaire on paper. So his holding is worth. So at its peak, it was worth $2 billion. Now it's worth $500 million. And the thing is, Fitch has actually downgraded MinRes' debt.
Yeah.
So that's not pretty at all.
No. So they did.
Ellison,
they did a good thing.
And Ellison had to sell off assets, even a $30 million yacht. So,
poor him.
Wow.
Poor guy. Poor guy.
maybe you can take him on yours.
Yeah. We were on that last week. The Cayman Islands, Australia machinery arbitrage not yielding what it used to.
No.
And I just read in the Fin Review as well. Speaking of CEO disasters, our favourite Richard White. I'm glad I've been wanting to write an article with the title along these lines, because obviously Richard White, wouldn't say he's a slender guy. He's 70 years old, and the headline in the Fin Review is WiseTech shareholders one cheeseburger away from disaster. So, which I thought I've got to give a clap to the bloke who came up with that. I didn't have the balls to write that headline, although I've been thinking it for weeks. But I mean,
Well, as you said, like when you have a 70-year-old as head of innovation.
Yeah, no. Look, and it's not to say that 70-year-olds can't be innovative. Don't get me wrong. I'm not going to be ageist here, but on top of, I'm sure Mr. White will be looking forward to International Women's Day tomorrow. So but US stocks now. If you're in the vodcast, you'll be able to see this. But just for the people who are just listening to us, let me describe the scene. So it's red on red and more shades of red.
Yeah. And the key is it's all the big squares that are red.
Yeah. So Nvidia for the week down 18% as of the close. Amazon 8, Tesla 9.5, Meta 8, Netflix 8, JP Morgan 5, and Google, Apple, and Microsoft only down about 1 and a bit, but they certainly didn't rally as much. But Broadcom 17 as well, and I think they reported earnings. Even Costco, interestingly, had disappointing earnings as well. So the only green
was only down 1 in the aftermath. Interesting.
The only green you can really see is in the healthcare sector. United Health up 4, Johnson & Johnson up 2, Procter & Gamble. So look, we Berkshire Hathaway flat because they're in
cash.
They're in about $400 billion in cash and chuckling away.
T-bills, basically.
Yeah, more T-bills than the Treasury themselves, apparently.
Or as the phrase is, you T-bill and chill.
Yeah,
basically.
T-bill and chill. Yeah, right. Okay. I don't think it's the same as Netflix and chill, but Palantir down 12. ServiceNow down about 8. We've recommended that as a long-term rec, but it's never actually been in the buy zone. It's probably pretty close. For those of you who want to obviously, do bits, review your portfolio and things, our investment committee will be out next Tuesday. We're just going to give ourselves the benefit of seeing the payrolls number before we go and make any drastic calls. But yeah, the retailers are out this week as well. Best Buy, Target, Foot Locker. I think they're, Foot Locker was up a little bit, but the rest of them
how's the American
down.
consumer? Are they hurting?
Costco being down concerned me more than anything. That's another one that's I think has been considered for the high conviction. It's one of your faves, JT. But yeah, the consumer's not doing great. I think that is a bit of the canary in the mine shaft. I think businesses are pretty they just don't know what's going on.
Yes.
So I saw an economist from on Ausbiz this week. He said I've almost given up every time I do a deep dive on economic stuff. I've just got to redo it by the time I publish it because Trump changes the rules. So yeah, I think everyone's getting a little bit tired of it. But pretty key night tonight. Payrolls, right?
Yeah.
So,
what's the prediction or
same as the last 3 months: 150 and
150.
4%. Again, for the 85th month in a row, I'm going to bring up the fact that we haven't had negative payrolls since December 2020.
One day you'll be right.
What's that?
I'm just saying, one day you'll be right. It could be next month when the Dow Jobs, but
broken watches right twice a day.
but mind you, it's all about how they actually count the statistics as well. It's like, I think they've given the government employees like 8 months of severance leave or whatever.
They'll start to come in apparently in a month or two. Some of them haven't been given a lot of benefits. So
I'm just saying, like, let's just say you get 8 months of benefits. When do you actually become unemployed? It's all about when they count that. Not that I know what it is, but I'm just saying, like,
well, and you drop off after 6 weeks as well.
Yeah, and then
if they fire all the government employees, who's going to count the numbers?
Exactly.
Yes, maybe
make it up.
Maybe they've.
Well, it'll be the same person that counted the 150-year-olds.
Yeah, well,
or whatever department was doing that.
Or the same bloke that removes inflationary things every time the inflation number comes out. Oh, the rent's inflationary, but we'll just take that out.
So, or stakes have gone up. We'll just put spam in there.
Yeah, exactly. That's they're pretty good at that. But yeah, they're not going to be able to avoid it if tariffs come in because that's across the board, right?
Yeah,
so,
exactly right.
But yeah, look, I think overall we were 2 bears and last week and 3 bears the week before.
Yeah, so it's 2 weeks in a row we've been bearish.
I'd probably favour a bounce tonight if the number comes in as expected, which I think it probably will. I dare say, if you're a government employee, you'd be too frightened to publish bad numbers. Trump will come in. All of a sudden, job cuts might increase by 200% in your department. So, but we've got a few articles on the weekend edition where, just one on International Women's Day, which I would look. We don't have a female employee here. It's on a day-to-day female broker. But I wrote an article just about basically some of the really successful female CEOs: Woolworths, Amanda Bardwell, Macquarie, Xero, Telstra as well. I'd forgotten about Telstra.
That's right, yeah.
Nearly all of them basically came up through the ranks. And they're doing really good jobs. All of this, Amanda Bardwell's been pretty harshly dealt with in the press, but I think history will say, she's done very well. She built their digital arm into an $8 billion. Certainly better than the bloke that walked out in the interview on Four Corners or whatever it was. But just really interesting to see. It's still very underrepresented in Australia, and I think not from a feminist standpoint, but the statistics generally show that they do a fantastic job. Basically, they're just having to fight harder to get there, and they're half the population. They're going to have more insights than a board with just males. So their statistics are overwhelming. If there's a female on the board in Silicon Valley, the success rate's like miles better. But apparently it's like a 1%. No, it's
a small sample size.
It's no. As in, there's about 1% female board representation in startups. So they don't tend to. And we had the same in trading. When I had the academy system, we'd interview. We had it was 1% application rate. So we couldn't get better than 1%. Really, it's pretty hard to pretty hard when I'm sure there's.
Would love to have more.
Oh, absolutely. I mean, I don't know. I mean, I would be much better judge on on female orientated stocks, and I think that Woolworths and Coles both have female CEOs, and I think that's a pretty smart move because I'm sure as hell not doing the shopping. I'm pretty much just told what to pick up. So that's. But moving to commodities, obviously. Pretty brutal in crude and iron ore, but
So I'll go from the top. So gold, pretty steady, but it was quite weak into the weekend last week, and then it's bounced nicely. Silver, similar, but the bounce has been a lot stronger. So it's back at that 32 sort of 80 level on the spot. So that's a nice level to sort of bounce off from here. Copper was the one that's actually it was just been going sideways, and then I think it was like Wednesday.
It got hammered early in the week.
Yeah,
and then
I wouldn't call it hammering. It's like if you zoom out, it was actually just more a little bit sideways consolidation. But then we had that massive move up to 480. So
rarely would you see iron ore down 4, but copper up 4.
Yeah,
you know what I mean. Like that. Yeah. It's very much bucked the trend, and that's to do with specific copper tariffs.
Yep. So uranium at least has not made new lows. So
that's a win for uranium at the moment.
Which is, let's take what we can get. Crude oil. So that's actually 3-year lows on crude oil, trading around the 65 to 66 a barrel. So fairly key level here. If it keeps going, we could see a $50 barrel oil. And Trump wants 40. I believe at 40.
So, but if Trump wants 40, that means he wants 60, probably. You know what I mean?
He wants lower prices.
No, I know, but he tends to, always divide by 2. Where
Yeah, fair enough. But so his number 40 was that was actually Russia's cost of production. So if you get it below that level, they can't fund their war machine. So that's all speculation as well. Iron ore drifting lower, not great. Bitcoin, interesting. So over the weekend, Trump came out and made crypto great again, and that was actually our Monday morning, or Sunday night, and that shot Bitcoin back up into the 90s, and then basically it's fallen back down and then bounced again. So it's hovering around the 90 level, and quite surprising that it's with the way that the equities and tech have gone risk off, I thought Bitcoin would be a bit weaker, but it's holding in there. And the US dollar. So Dixie has fallen down to 104, so it's broken key levels. And the key is euro and the yen have been the strongest. So
I think the Aussie dollar's at 2-year highs or something stupid, isn't it?
Yeah. It was down to like 60.
No, the Aussies bounced quite a bit.
No.
Well, it's up on the week. So
yeah, but if you look, it's nowhere near 2-year highs. Like 2-year highs would be around 69 cent level.
To be honest, I'm not particularly watching it very closely, but but I remember
anyway, that's
reading some positivity about it supposedly.
Yeah. But that's the commodities for the week. So just generally, if the US dollar keeps weakening, gold prices should be quite supported, and obviously we've got this turmoil. So I still think gold is still the one of the easier trades.
Yeah, if you want to make life hard for yourself, buy some silver and copper. If you're a sadist, buy some uranium.
Yeah. Thing is though, we're the market's kind of like pricing for stagflation at the moment, meaning that a slowing economy and higher inflation. I think if we sort of move into the economy weakening and some deflation, meaning that some prices are coming down, because then watch out for gold then. But till that point, I'm still quite bullish.
Yeah, look, I mean, people always talk about gold and inflation, but that since the gold standard disappeared, since Nixon, it's been those numbers are very you got to pick your period.
Yeah,
it's all over the shop.
But just saying, look, so back.
But store of value, like real assets.
Yeah, but I'm just saying, look, back in the GFC when it was like a fire sale, gold got sold off as well. So
yes.
So just saying that, I'm still quite bullish gold, but if it does start turning around, I will change my view.
The chorus is growing for people saying that 3,000 is going to be the top. That's going to get smacked.
We'll see.
So a lady who was after my own heart, because whilst I'm bullish gold, because gold is I don't get the whole gold thing. It's yellow, it's shiny, it's got no industrial use. I think it's a ridiculous thesis, but people go back to it's like Blanky for a kid. They go back to Blanky, which is gold generally when things kick off. So yeah, I think, but silver scares me a little bit. Copper, this is huge levels. Like this 480 here, if it fails here again, I'm a hardened copper bull. I'm very skeptical. Which was really lovely, actually. I got some like, oh look, copper's going up on Twitter this week, and I'm like, I'm so just tired on this trade that realistically I haven't got my hopes up at the moment. I might get a little bit more optimistic when we see 520 or something like that, because how many times I've bought the break and paid dearly for it.
As always, you got to just learn from trading, and if price action, if it does break this 480 and still keeps going, then obviously just keep that trading.
It was the high previously, so back about a year ago, but doing quite well. So economy and politics. Look, to be honest, it's a bit of a terrible thing, but we've got Gorilla Gold here as well.
Oh, no, that's not the trade of the week.
It's not trade of the week, but it has gone up. Polymetals. So you'll have to download the PDF. Got a couple of technical issues today. The camera went on tilt, right, and I forgot to put the chart in. But
that's right. So, but I'll chat about polymetals. So I actually was on the call. Was it last week or I forget?
It was last week.
Last week, but like when you think about it, like there's so much that happens. But polymetals, I was forced to learn about it on the call. What I liked about it is that they're actually a silver producer, or soon to be silver producer based in New South Wales. So I think it's Cobar or there.
Coal country, isn't it?
Either way, it's silver country now.
Yep.
But the key was they just raised 35 million at 80 cents, and it was trading at sort of 69 cents. So I was like, okay, someone has backed it with 35 million, and that gets it to production. I think production's in May. But the thing was, look, it was just trading under that level for a while. So I just kept it on my radar. Positive price action 2 days ago, and then I put it out as an alpha reg, and it has bounced instead. But basically, you're buying it under the levels of the instos, and it was just a matter of there was someone for some reason selling out. Be a margin call, could be whatever. But now we found some support, so now's the time to get in.
Now, for those of you watching the vodcast, obviously we've got Gorilla Gold here. That chart's from a while ago. That's at 35 now, is it not?
36 cents.
36 cents, so up 20%. So I promise you I haven't left that chart up there so we can get a humble brag in for JT. He's been on fire lately. For those of you, we got JTrader, which you got your setups.
So I just send out every day just my best setups for the trading day, and then obviously still got the alpha. So alpha is more. I'll actually have a look into the company, have some deep dives, whereas the other one's just pure trading, just pure charts. And just send that one every day.
So for now, get yourself on that email list for JTrader. And then the alpha trades, obviously, you get them in live. You get them live via SMS and email, etc. They're part of the subscription. You can just have the alpha, or you can have all the portfolio stuff as well. And then, obviously, the full service gets all the investment committee, etc. Which is it's similar to this, but we're not buggering around as much, and we're actually it's a touch more serious overall, but. I think.
Okay, so
I think I do have another. I've got the. It was interesting to have a look into the fear and greed at the moment. So we're extreme fear. We're at 17, and the only thing you can see.
I think you took part of the gauge out.
Yeah, I know. That was my joke last week that it was in the oh crap region. But if we get a negative payroll tonight, it will be in the oh crap region.
Yeah.
So what's market momentum? So there's 7 different indicators. Two of them I just didn't bother. They're overly complicated. Market momentum, stock price strength, market volatility, and put and call options. Now, put call ratio. JT, explain that.
Okay, so just obviously puts bearish, calls bullish. If there's more call buying, then basically the market's more bullish. What we see here is there's an actual tick up there. So what that actually means is just more put buying now at the moment. So there's more fear coming in, and that's why we have a extreme fear gauge or part of it.
Yeah, so the only thing really, and we're at 17 out of 100 here, junk bond demand was still at extreme greed.
Wow.
So I would be.
Because I keep hearing that, like, when we see the market crack, it's going to be in the credit spreads. It's going to be, it should show up there first.
Which is exactly why I brought this up, JT.
Yeah.
It's funny you should mention that. So I would be watching credit spreads as an indicator, because if that is stupid, basically. You can't have the market in extreme fear, momentum gone, people buying puts, and they're still investing in junk bonds.
Yeah.
So that is, so basically junk bonds are, you're not expecting your money back, but you're getting like 30%, 25%. It's like loan shark rates, right?
Well, you're lending money to mid-res.
Yes. Don't say that.
No, but that's what a junk bond is.
Yeah.
Oh, actually, they're triple B negative now or something.
That's well into the investment grade. So investment grade still goes down to min-res level. So that's how bad junk bonds are, basically. If credit spreads start to crack, we are in trouble, because we may need that extra segment.
Yeah.
Because if we're at 17 and that's an extreme greed still,
mm-hmm.
we could be in more trouble than Skippy in a bushfire.
Yeah, and I actually talked about that this morning's morning meeting. Like, if you look at, it doesn't have a chart of the VIX here, but we actually...
No, that is the VIX.
Okay, so what the VIX usually does is it has massive spikes up and spikes down. But this is the first time where I've actually seen it's like trending up. So
yeah.
It's like, and we're only at levels. So we've had these levels back when Trump was actually elected. So obviously it was quite volatile then, and obviously a lot more fear built into the market. Once he got elected and we knew what he was doing, it calmed the VIX down. But now it's actually just like heading on higher. But what we haven't seen is a massive spike higher. So interesting that so look, as I said, I think it looks like this market might just grind its way lower, which is not.
We said this morning, the market grinding its way lower is statistically the biggest anomaly in markets. It's always up the stairs, down the elevator, as they say. At the moment, we're going, we're grinding lower, which is just that kind of never happens.
Yeah, exactly. So we're trending lower instead of like just falling off a cliff, which is what usually happens.
Haven't heard buy the dip once this week, actually, and which is pretty surprising, except for Kramer on Nvidia. So that's Kramer of the week is Jim. It's down 18%. Inverse Kramer actually had a pretty good wrap up of what he was actually right on one. That HIMS, like he said, it was Novo Nordisk, the GLP-1 drug's going to come in and blow that away, but it's up. But that has actually given it it all back in the last week. So the Jim does get one right every now and then.
Well, that's the thing. It just shows you can't get it all right.
Yeah,
and you can't get it all wrong.
But well, look at me. I've been long copper for 2 years.
So what are we? So I think we were 2 bears last week and then 3 bears the week before. What are we for next week?
I'm still bearish. I think we're going to have a little bit of a crack at the lows, but I do think by the end of next week it'll probably flat-ish or slightly lower. But I think there will be a little panic.
Okay, so I'm still bearish.
Yeah, I'm long-term bearish. That's for sure. I kind of get the feeling this has got another, like it'll sucker people in, like like the mermaid, the siren, calling to the ship to. So I kind of think payrolls will come in as expected potentially, and then Trump will say something that's to get the stock market heading back higher a little bit, and then it'll start to lure people back in because every time we've seen this extreme fear, it's bounced. Don't get me wrong. Like if I could wear a bear suit over the top of a bear suit, generally, like I would be. I think this thing's going to get pretty smacked up over the next sort of couple of months, and I keep saying very similar to 2022. I think people have got too much risk on, too much leverage on. It will, but I think it'll do what it did in 2022, where it spiked down, and then it'll grind higher and just get people back in, going, "Oh no, we've missed we didn't buy the dip, we've missed the dip," and then it probably goes again and bottoming maybe May, June.
Yeah. Well, one thing I do remember through that period is that the credit spreads or the high yields were great leading indicators of that. So hopefully it does the same thing again and makes our trading job easier.
Yeah, and that was another reason why I was like, if credit spreads haven't cracked, then I don't think we're going to be plummeting. So I wouldn't say I'm definitely not bullish next week. I think we end up.
Okay, well,
I think we end up. I think we end up for the week, but not by much. So you're probably, if that's the definition of a bull, like I'm a reluctant bull. But it'll be a sucker play. It'll be the thing that lures you in, and then so I'm trying to be a bit tricky, I suppose. But yeah, the market is so sick of Trump's crap. Basically, it's just you can't have an announcement every day, every 4 hours. Like it's just like it's not freaking reality TV. Just his press conference this morning was ridiculous. But he's had 3 press conferences because I watched Bloomberg right in the morning report. 3 out of 4 days this week he's had a press conference in the Oval Office, signing an executive order, just riffing, talking crap, like, and then I think the market's just going, well, I give up. Yeah. I think a little bit at the moment, but
and mind you, it's super expensive. So yeah, and you're still getting I think nearly 4% on your short-term rates in the US. So yeah, the sidelines do look mighty tempting.
Oh, absolutely. You don't have to go like full Buffett, and but although you may be right, but I think it's always got a little ace up its sleeve to just try and fake you out, and I think next week's kind of feels like the fake out, unless payrolls is negative, and then Armageddon, it's gone. But we'll wait and see. But yeah, obviously keep up to date. Morning reports and afternoon reports. We've been writing up. We tend to do a bit more content when the market's busy, so keep up to date on the website. Follow JT on JTrader, and yeah, just you can follow Kai on Twitter as well if you like. But he's doing some good work at the moment. But stay safe out there. Possibly get a portfolio review. Might be a good idea, and have a look over the weekend. And we'll speak to you next week.
Thanks, guys.